All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today's April 15th, 2024. And, well, I guess the top story this morning is World War III was kind of a dud. Mildly put, I guess, or maybe it wasn't World War III at all. Whatever it was, the much anticipated Iranian attack on Israel. It happened on Saturday, in case you've been hiding under a rock all weekend. It happened. It came and went. It was a pretty big barrage. It was widely telegraphed, and it looks like it was over right as it started. All right. So, we're going to get through this pretty quick here, guys, but it's from the market perspective, it's been a non-event here. All right. Last week, Israel attacked a Iranian consulate in Syria. There were people in the consulate that were believed to have masterminded the October 7th attack. So the story goes, attacking an embassy or a consulate is like attacking sovereign soil for that country. And so everybody knew Iran was going to do something. All right. That was viewed as an escalation by Israel attacking that consulate. Iran responded on Saturday. It took them forever. There was a lot of chatter all over the world. Everybody knew it was coming. And it's almost like they took their time preparing the counterattack in order to make sure that it was not too effective. We've seen this before where the Iranians telegraphed their response. This happened after the U.S. killed Soleimani, and then the Iranians telegraphed that they were going to respond. They were going to target a base in Iraq. They hit that base. They gave us time to get our people out. It looks like it was something very similar happened here. Now, the scale of this attack by Iran was very big. It was over 200 drones, along with ballistic and cruise missiles, were all fired. Now, as soon as all of these things were launched, the Iranians were very quick to say, we're done here. The missiles were still flying. The drones were still flying. And the Iranians said, we have retaliated and now we're done. As if to say, okay, Israel, ball is now in your court. Now, there was a combination defense of Israel, the Israeli air defenses, the Israeli Air Force, along with the U.S. Navy. There was the combat debut of the SM-3 missile in the U.S. It looks like it was pretty effective. It's hard to sort through the propaganda, though. Keep in mind, you're going to have propaganda on both sides here, so it's really hard to tell what's what. You also had the UK, the Royal Air Force was involved here. You had Jordanian air defenses shooting down missiles that flew over its territory. That was unusual to see Jordan knocking missiles bound for Israel out of the sky. It looks like this combined air defense was largely effective. Most of the missiles did not hit their intended target. There was some targets were hit. There was damage on an Israeli air base in the southern part of the country. But not a lot of reports of casualties or any that I've been able to see. So obviously this was not a large humanitarian event. And the world is largely yawning this morning, kind of shrugging this one off. Oil was actually down. So to see oil down after a massive missile and drone barrage of Iran against Israel, that goes to show you that this was a scripted event, folks. I mean, I don't know how else to put it. I mean, it almost feels like we're being played with by the leaders on both sides here all around the world. Western media was so quick to declare this event over as it was still happening. Well, the market just doesn't seem to care. Also, something to keep an eye on. It also happened during this event. There was a container ship was seized by the Iranians in the Strait of Hormuz. Now, that's happened before, but that happened as this missile attack was going on. It was an isolated event. To my knowledge, only one tanker was seized. I believe it was flagged out of Portugal, but this tanker is tied to an Israeli company somehow, kind of the same thing we've seen in the Red Sea. So keep an eye on the Strait of Hormuz. That's potentially an escalation there. If we were to end up with a situation similar to the Red Sea in the Strait of Hormuz, that would have a big, big effect on the price of oil. But right now, the market is shrugging it off. Now, all that being said, there is a lot more going on in the world, guys. Tesla announced mass layoffs today. 10% of their global workforce, which puts it somewhere around 14 to 15,000 people are about to lose their jobs at Tesla. There's a website called Electric was reporting that over the weekend as a rumor. We got confirmation today based on reviews of internal memos within Tesla. So the EV bubble continues to pop. We got retail sales this morning. The stock market doesn't see it, but you better believe the bond market saw those retail sales. Retail sales up 4% year over year, 0.7% month over month. That is an acceleration of America's consumerism. I think buy now, pay later is probably playing a big role in there. Maybe we'll have more to say about that one later on. But what the market is interpreting this at least the bond market, as soon as that came out, we saw the dollar start to strengthen. We saw interest rates start to rise because the bond market is looking at that retail sales report and they are saying inflation coming back, inflation surging again. All those stocks just went higher on the news. I don't think the stock market quite is reading the inflationary tea leaves that the bond market is seeing. Hong Kong has approved the first Bitcoin and Ethereum ETFs. There were 3 different ETFs were approved in Hong Kong. They're not trading yet, but that could potentially bring more institutional money into Bitcoin, which coincidentally, Bitcoin had a bloodbath over the weekend. Big sell-off in Bitcoin on that Israeli attack. Bitcoin dropped from around 70,000 on Friday all the way down. It touched, I believe, 61,000 over the weekend. It's back up in the middle now. Also, keep in mind, we are just 4.5 days away from the next halving event. And historically speaking, those have been market-moving events, the Bitcoin halvings. Maybe not on the day of the halving, but in the months following a Bitcoin halving, the price action in Bitcoin is usually pretty wild. That's coming up in just a few days. Bank earnings this morning. A lot to digest in bank earnings. This is a busy day going on here. Goldman's doing really good on a lot of merger activity. There's been a lot of M&A in the oil and gas space. Charles Schwab reported revenue was down. Also, a lot of new accounts opened at Charles Schwab. Over 1 million new accounts, brokerage accounts opened at Charles Schwab. That's very market toppy to me. When you see retail piling in, new traders starting Charles Schwab accounts by the millions, that usually means retail, the last one on the ship. We talked about that in my interview with Bob Coleman over the weekend. Maybe that's calling a top there. And M&T Bank, some interesting things coming out of M&T Bank this morning. $200 million in loan loss provisions around commercial real estate, up 67% year over year. More fees to the FDIC from the bank failures last year. So M&T Bank, that's one to watch out for in the commercial real estate bubble. And Samsung is getting in on the subsidy parade from Uncle Sam. $6.4 billion in grants for Samsung this morning to build a new chip factory in Texas. This follows similar announcements for Taiwan Semiconductor and Intel. You get a subsidy, you get a subsidy, you get a subsidy. Billions of dollars for everybody. My economic plan is working. Meanwhile, those interest rates continue to creep up. That debt pile continues to get bigger. Oh, I'm sure that's just going to end well for everyone involved, right? Guys, this is one of those days where there's just too much going on in the world. So without further ado, why don't we shrink my big melon of a head and let's see what's going on in these markets. And while we're doing that, don't forget that thumbs up button for the YouTube algorithm. And if you're new here, hit that subscribe button, hit that notification bell, and come on back tomorrow. Have your coffee with the melon heads because we do this every day. S&P right now is up 43 points or 0.83%. You may notice we got a big candle right here at 8:30. That was those retail sales numbers when they were announced. The market really liked the retail sales numbers. It shows the American consumer is still spending, but I'm not sure that's such a good idea. I'm not sure that's really good news because the American consumer is debt spending. It's credit cards. It's buy now, pay later. And that's also very inflationary. But for now, stocks are liking it. The S&P is up pretty high this morning, and the Dow is also getting in on it, up 321 points, almost 322 points, 0.85% higher for the Dow. And the NASDAQ is also up about 0.88%, 156 points to the upside for the NASDAQ. So stocks up across the board this morning. And wow, the U.S. dollar is on a roller coaster. I don't know what just happened a few minutes ago when I started talking. But at 8:30, you see that big green candle in the DXY? That's between 8:30, 8:40. That was the retail sales number. The dollar really strengthened on that news and then immediately reversed course. I don't know what's going on right now. We have got a weaker dollar all of a sudden down 10 basis points or 0.1%. Maybe the BOJ. Did we get some BOJ announcement while Jack was talking? I'm not sure what's going on there, but the dollar is all over the place this morning. We'll keep an eye on that one. And interest rates are heading higher, largely on the heels of that retail sales report. The 30-year Treasury is up 9 more basis points, 4.693 for the 30-year. The 10-year is up 11 points, 4.610. Guys, we were at 3.8 just a few weeks ago. Interest rates are rising alarmingly fast here. This is going to cause problems if this keeps going. Up another 11 points this morning. The 2-year, 4.967. We're almost to 5% on the 2-year here. That's up 8.5 points this morning. And the 1 month is at 5.395, up 2 basis points. Looking over at the commodities board, we have got gold is pretty much flat, down $1.80 here. June gold futures, $2,372, down about 0.1%. Silver, however, is having a good morning here. May silver futures, $28.82. That's up 49 cents or 1.7% this morning for May silver futures. I like the shiny silver once again above that resistance level around 28.30. Keep an eye on that one. We had Mr. Slammy showed up on Friday. We were all wondering where he's been. He came, he slammed, he's gone, and now the metals are moving back higher again. Although that big deviation to see gold flat and silver up, that's a little sus. I'm not going to lie there. That doesn't exactly make sense, but we'll keep an eye on that one today. Also, crude oil. This is the big one here. I mean, this is how you know that this Iran-Israel event was a nothing burger. May WTI futures, 85.22, down 44%. All right. If war was really breaking out between Iran and Israel, if this was going to be a sustained conflict and there was going to be mines in the Persian Gulf or something like we saw in the 80s, oil wouldn't be heading lower here, down 0.5%. So oil is really shrugging this one off. Let's see what else we got this morning. Looking over. Nope, we don't need that one. Let's check out Bitcoin because Bitcoin went for a wild ride this weekend. Starting on Friday, I mean, we started out around 70,000 Friday morning. By Friday close, we were at about 67. And then the fireworks started on Saturday with the Iranians and the Israelis. Bitcoin sank as low as 60,900, it looks like. Bounced back, and we've gone up from there. Now here we are at 66,239. Up about $460 this morning. Check this one out. This is potentially needle-moving news for Bitcoin. They're not trading yet, but we have approval. Hong Kong gives initial approval to first Bitcoin and Ether spot ETFs, according to these funds. Hong Kong conditionally approved its first spot Bitcoin and Ethereum exchange-traded funds on Monday, money managers said, paving the way for the city to become Asia's first to accept the cryptocurrencies as a mainstream investment tool. At least 3 offshore Chinese asset managers will launch the virtual asset spot ETFs soon. The Hong Kong units of Harvest Fund Management and Bocera Asset Management said in separate statements that they had received conditional approvals from the Hong Kong Securities and Futures Commission to launch the ETFs. Meanwhile, the Hong Kong unit of China Asset Management said that it had received regulatory approval on Monday to provide virtual asset management services, and the firm was developing spot ETFs of Bitcoin and Ether. So this could mean some Asian institutional money will be flowing into Bitcoin also. I don't know how big of it, if this will have anywhere near the effect that the US ETFs had, probably not, but this is certainly bullish for Bitcoin here. And just a reminder, 4 days, 12 hours, and 20 minutes away from the next Bitcoin halving. It'll be happening, I guess, Friday. Friday is the halvening. Historically, big things happen in Bitcoin prices after a halving event. Now, let's talk about U.S. retail sales. This was a really big story this morning. It's moving markets. I don't think the market quite got the right message from this one, but retail sales in the U.S. increased 4.0% in March over the same month in the previous year. So we got a big bump in retail sales. Now, guys, I would add retail sales. These numbers are not adjusted for inflation, but if we're up 4% and inflation was what? What do we have? 3.8, I think was the last CPI. That means more stuff is selling. It's higher than the rate of inflation. So this is going to put upward pressure on inflation to see retail sales growing at this level here. Also up sharply from where we were in February and January, obviously. A lot of credit card debt, a lot of buy now, pay later debt. The U.S. consumer is not done here. Now, there was some interesting things in the month-over-month numbers that I want to point your attention at here. Now, that 4%, that was the year-over-year number that we just saw. Now let's look at the month-over-month number. Retail sales in the United States increased 0.7% in March of 2024. That's over the previous month. So that's another big gain here. Slightly down from the month-over-month gain in February, but much bigger than the negative 1.1 in January. You largely expect a decline in January because it's comparing it to December. But the interesting thing here, 0.7% for all retail sales. But now check this out. When you take out autos, retail sales, excluding motor vehicles and parts in the United States, jumped by 1.1%. All right, so month over month retail sales up 0.7, but when you take out cars, it goes up to 1.1. That means the auto market is a big drag on consumer spending here. And that's telling me we've got big problems in the auto market here. Something is going on in cars. And lo and behold, we get on the same morning this announcement from Electric. By the way, I've never heard of this website before, electric.co, but they had this story about a day and a half ago. It was only a rumor, but it seems like they were right on the money. So good on you, electric.co. Tesla lays off more than 10% of its global workforce. Tesla has announced layoffs of more than 10% of its global workforce in an internal memo, an internal company-wide email. We exclusively reported yesterday that Tesla was prepping a mass layoff. For a few months, it's looked like Tesla might be preparing for a round of layoffs. Tesla told some managers to identify critical team members and paused some stock rewards while canceling some employees' annual reviews. It also reduced production at Gigafactory Shanghai. Then over the weekend, we heard rumors that these layoffs were about to happen, which came to us from multiple independent sources. The rumors indicated that layoffs could be as high as 20%. And in addition, we heard that Tesla would shorten Cybertruck production shifts at Gigafactory, Texas. Now the rumors have been confirmed. While we still don't have an exact percentage, more than 10% means at least 14,000 employees will be laid off, as Tesla's employee headcount is somewhere on the order of 140,000 total employees. Notably, Tesla's headcount has not experienced as much rapid growth in recent years as it has in the past, making that line of the email ring somewhat hollow. So looks like at least 14 to 15,000 people losing their jobs at Tesla. We don't know where. Tesla has big operations in Germany, big operations in Shanghai, big operations in California, in Texas, but it's probably going to be pretty widespread. Now, interestingly enough, Tesla stock this morning is down ahead of the opening bell, 0.38%. That's unusual because we have seen any company announcing layoffs has seen their share skyrocket on the news. This stock market loves a trimmed headcount, but Tesla is not seeing any of the benefits here. They're actually down this morning about 0.5%, trading at 170.27. Meanwhile, we got some bank earnings this morning. Goldman Sachs profit jumps 28% on investment banking strength. Goldman Sachs profit rose 28% in the first quarter, buoyed by a recovery in underwriting and deal making that boosted its investment banking unit. It reported on Monday. Profit rose to $4.13 billion or $11.58 a share for the first 3 months ended March 31st. That compares to $3.23 billion or $8.79 a share a year ago. So what is driving these great numbers from Goldman? Well, here we go. There's some hints here. With corporations regaining some confidence to raise money in capital markets, equity and bond underwriting business rebounded and corporate boards clinched more mergers and acquisitions. So you got companies issuing debt, companies issuing stock at all-time highs, and you got a lot of mergers and acquisitions, notably in the oil and gas space. Goldman Sachs is making money off of that hand over fist. Global M&A volume climbed 30% in the first quarter to about $755 billion from a year ago, according to data from Dealogic. I'd say more than half of that was just a couple of deals in the oil and gas space. Exxon, Chevron, both had some big mergers there. Those were like $60-70 billion mergers by themselves. Higher fees from underwriting debt and stock offerings, as well as advising on deals, lifted Goldman's investment banking fees up 32% to $2.08 billion. So a lot of mergers, a lot of bond issuance, a lot of stock issuance, and Goldman is benefiting from that. Goldman stock right now is up 4.2% ahead of the opening bell, trading at $406, up $16 ahead of the open. Shifting on to Charles Schwab. We've got Schwab tops revenue expectations following last year's tumult. Got to avoid that tumult. Charles Schwab's first quarter net revenue topped estimates as the retail brokerage tried to put last year's turbulence behind it. The Westlake, Texas-based firm reported $4.74 billion in net revenue for the first 3 months through March. That's down 7.3% from the $5.12 billion a year earlier, and topping analysts' estimates of $4.71 billion. So revenue is way down, but it's not down as much as the market was expecting. The market was expecting worse, so they're saying it's a beat from Charles Schwab, even though they're down 7.3% year over year. Against an improved macroeconomic backdrop, clients entrusted us with $96 billion in core net new assets, including $45 billion in March alone. So you got a little bit of FOMO going on here. People piling into the market. That's according to CEO Walt Bettinger. He said in a statement, at the same time, solid investor engagement contributed to over 1 million new brokerage account openings during the quarter. That right there, that is screaming market top to me. 1 million new brokerage accounts started in one quarter. $45 billion of new money flowing into those brokerage accounts in just March. Guys, when retail piles in, you know you're almost at the top. You know you're right there. Retail's the last one in every time. And boy, is retail piling in. 1 million new brokerage accounts opened during that quarter. The firm reported $269.5 billion in total deposits. That's below estimates of $270.5 billion for the period. Schwab's deposits have been watched closely as consumers sought higher yielding alternatives amid escalated interest rates. That's another thing to keep an eye on there. Deposits shrinking at Schwab, even though the brokerage accounts are opening. Schwab was one of those quasi banks. They're technically a bank that was having pressure last year from the deposit flight and everything that was going on in the regional bank crisis. So there's some things to worry about here in this Schwab report, even though they're making it sound like unicorns and rainbows in the headlines. Charles Schwab stock is down 0.9% ahead of the opening bell, trading at $69.40. And we got another bank, M&T Bank, profit slumps 25% after interest income fall. This is probably the most important of all the bank earnings that we got today, even though this is the smallest of the three banks that I'm covering here. I think this is the most telling here. Big drops in profit, big drops in net interest income, and of course, commercial real estate showing its ugly head here. M&T Bank posted a 25% drop in first quarter profit on Monday as higher deposit costs reduced its interest income, and a turmoil in the commercial real estate industry prompted it to set aside money for rainy day funds. So we saw this with JPM's earnings last week. We saw it with Wells Fargo's earnings, all right? Their margins are getting compressed. They're having to pay higher interest rates in order to keep the deposits at the bank. That's eating into their margins because, you know, they make loans. They can only make so much money on the loans that they offer. And a lot of banks aren't making that many loans. So their income is being squeezed. They're having to pay higher deposit rates to keep their customers where they are. So the difference between what they loan at and what they borrow at is shrinking. That means their top line is getting hurt. 25% drop in first quarter profit. Regional lenders have had to pay higher interest rates on deposits to prevent customers from fleeing to higher yielding alternatives such as money market funds. Buffalo, New York-based M&T's net interest income, the difference between what a bank earns on loans and pays on deposits, it fell 8% to $1.68 billion in the first quarter from a year earlier. And also, this is important, M&T, which has substantial exposure to commercial real estate loans compared to its regional banking peers, they set aside $200 million as provisions for credit losses. That's compared to just $120 million a year earlier. So that is up 67% from a year earlier, setting aside a lot of money for those CRE loans. And lastly, we've got one more point here. Separately, M&T also booked an expense of $29 million in the quarter tied to replenishment of the government deposit insurance fund, which was drained after Silicon Valley and Signature banks failed last year. So there's that FDIC charge continuing to hit banks in their quarterly earnings. So we got shrinking deposit income, more losses from commercial real estate, more money paid out to the FDIC. M&T Bank not doing so well here, and yet their stock is up almost 4% this morning. It seems the market was expecting a lot worse than they actually got because M&T shares are looking all right here, $139.82, up $5.26 ahead of the opening bell. So of all the bank earnings, I'd say there was the most bad news in the M&T earnings report, but the market was so negative heading into it that the stock is actually rallying here. And another important one here, U.S. to award Samsung up to $6.6 billion chip subsidy for Texas expansion. That's according to Reuters. It seems the government is just handing out billions willy-nilly here every day. Another announcement of a big subsidy for chips. Well, we gave all that money to the electric vehicle makers last year, and well, we see what they've done with it. Tesla layoffs. Might as well start subsidizing another industry while we're at it. I mean, it's an election year, right, folks? The Biden administration plans to announce it is awarding more than $6 billion to South Korea's Samsung next week to expand its chip output in Taylor, Texas, as it seeks to ramp up chip making in the U.S., two people familiar with the matter said. The subsidy will be unveiled by Commerce Department Secretary Gina Raimondo will go toward construction of 4 facilities in Taylor, including one $17 billion chip-making plant that Samsung announced in 2021, another factory, an advanced packaging facility, and a research and development center, one of the sources said. It'll also include an investment in another undisclosed location, the source said, adding that Samsung will more than double its U.S. investment to over $44 billion as part of the deal. The announcement will cap off a string of major chips and science grants in quick succession as the U.S. seeks to expand domestic chip production and lure away capital that might have been used to build plants in China and the region. Again, guys, I've mentioned this before. All those missiles that were fired over the weekend, all those Iron Dome interceptors that the Israelis fired, and the David Sling and the Arrow 3, and the SM-3 missiles that the Navy fired. I'm sure they were using their SM-2s also. All the air-to-air missiles that were fired on those jets, they're all full of chips. And all those chips are made in China, Japan, or Taiwan. All areas that are probably going to be targeted if a war ever breaks out in Taiwan. And if there's one thing this god-awful decade has taught us, it's that if there's a possibility of a conflict breaking out, it's probably going to. And so the U.S. needs to get these factories built. They're saying it's about economic growth. They're saying it's about the new green economy and ushering in an era of innovation. It's not, guys. This is all about missiles, things that go boom. One thing we've learned from the Red Sea and from the attack over the weekend is the United States air defenses are pretty incredible. I mean, we can reliably swat these drones and missiles out of the sky. Nothing has gotten near any of our Navy ships. We know they've tried, right? The Navy can't be everywhere, so some ships have still been hit. But our Navy and our planes have gotten very good at knocking these things out of the sky. The problem is ammunition. You got to keep those vertical launch tubes, those cells on the ships that hold the missiles. You got to keep them full. And those things are freaking expensive, and there's only a few places in the world you can get them made. And those are all places that are going to be targets if the big conflict ever breaks out. And it doesn't matter how good your stuff is. If you run out of it, you're going to lose. And so we're spending billions of dollars to build these chips domestically so that we can keep our ships armed if and when it ever comes down to it. This is all about defense. I know they're saying it's the Commerce Department. It's for the economy. But guys, you can consider this defense spending because it's the only real reason to do this is to keep the missiles flowing. So keep an eye on that one. That's the third announcement in as many weeks. I'm sure there's going to be more. We're going to be spending a lot of money on construction of these factories. So we're going to see a lot of manufacturing construction spending. That's going to make the I in the GDP equation a little bit higher. So this is going to add to GDP, even though it's being paid for by deficit spending. But this is really, you can consider this part of the defense budget. Another story to keep an eye on, guys. This one, watch this one. This is the chart of the U.S. dollar as measured in Japanese yen. And we are at 154.3. The USD JPY chart keeps rising. And the reason I'm mentioning this is because the Bank of Japan has historically defended this 152 level. We broke through it last week, and we have not heard from the BOJ yet. I'm pretty sure we're going to hear from them soon. I don't think they're going to sit there and watch their currency continue to depreciate until they do something. The question is, what are they going to do? Are they going to sell some of their U.S. treasuries to get dollars in order to dump those dollars on the open market to buy yen? Well, that would put upward pressure on U.S. interest rates. Or are they going to take out big swap lines with the Federal Reserve, print more dollars, basically the Fed printing dollars in exchange for printed yen, just so the Japanese can go mess with the Forex market? Well, that would add to the number of dollars in circulation. That could be very inflationary. Oh, and then there's the $14 trillion yen carry trade. That's a big question mark. So pay attention to this chart. This is a potential big landmine that this market could step on here. At 154, we're now broken out into new territory here. Keep an eye on this one. I don't think the BOJ is going to sit idly by while all this happens. And I just want to say thank you very much to Wonder She Her, who says, really appreciate the live streams. Thanks. You are most welcome, and thank you for the super chat and the support of the channel. I appreciate that very much. And thank you to the Nashville Pasta Man, who says Schwab absorbed Ameritrade, the new account. That is true. That did just happen. That was the end of last year. I think it was late last year that the last of the TD Ameritrade accounts got changed over to Schwab. I don't think that is responsible for that million new brokerage accounts. I could be wrong about that one, Pasta Man. I'll go back and double check. And if I am wrong, I'll let you guys know on my stream tomorrow. But I believe the last of the transition between Schwab and TDA happened late last year, and that million new accounts has nothing to do with the merger of TD Ameritrade. But I'm gonna verify that one. That is a good challenge, Mr. Pasta Man. So I'm gonna write that one down. TDA Schwab ? Homework for Melonhead. Thank you very much, Pasta Man. I appreciate the super chat, the support of the channel, sir. And thank you to Jason Bennett, who's a new member. Welcome, Jason Bennett, to the ranks of the Melonheads. I appreciate that very much. Thank you for supporting the channel. And thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate that very much. A lot going on in the world today. Israel and Iran. I hate to say it, nothingburger. But pay attention to the inflation talk around those retail sales numbers. It's going to be a noisy day in markets, guys. I'm not sure where we're going from here, but we'll be back tomorrow. So, everybody, thank you so much. Thanks again to my channel members and my Patreon supporters. Appreciate that. Links down below to all that good stuff. Hi, Mom. Hi, Dad. Love you guys. Till next time, live small and dream big.